private industry wanted, that the government, on the back of an increased base, doubled down on spending on public infrastructure. You were concerned about whether there's enough fiscal headroom to be able to make it happen. The government seems to have said, the Prime Minister seems to have, Mehuna, I will go out and try and do as much of the heavy lifting as possible. Does that enthuse you immensely?
Well, with the government increasing its infra spends, very clearly it is continuing on the path of growth for today. But with all the other action that has been proposed, it is also creating a conducive environment for the path for tomorrow. And what is impressive is the fact that not only is it a growth-oriented budget, it's an inclusive budget, it is also a budget which is fiscally prudent. And that's why overall it is a balanced budget. Of course, this budget needs to follow its strong execution, which is what we have seen in past years and we hope to continue to see in the current year. What this budget will do is once again provide tremendous tailwinds for this economy. By most narratives, we are behind the last 3 years' set of challenges, which means normal growth can come back now. And by providing these tailwinds, it should create new job opportunities, it should put more money into the hands of different sections of society, which automatically means that it creates the necessary environment for private sector capex to start coming back in.
You think that's beginning to happen? Because we had Mr. Banerjee with us, and a lot of people outside of India Inc. would like to see India Inc. invest more. And capacity utilization has been in the mid-70s. When you ask a particular entrepreneur, they'll say, you know, we aren't seeing as much demand just at this moment to be able to double down on investment. We're thinking about it, but let's see what happens in Russia, Ukraine, let's see what happens to interest, inflation, etc. Do you see that investment cycle start sometime soon, in serious earnest?
So we are starting to see it in specific sectors. You're seeing it in anything to do with construction, you're seeing it in chemicals, you're seeing it in steel. So there are sectors where you've seen this increasing. And if growth continues in the same strong way, and we are reaching that capacity limit across a number of different sectors where they have no choice but to reinvest, you should see that happening relatively soon. Keep in mind that there is a difference between private sector investment and public sector investment. Private sector investment has to earn a certain reasonable return on the capex that it borrows. So there is that difference. But at the same time, the private sector is here to build business, to make money, and to be able to distribute that money. So if the environment is conducive, there is no reason why you shouldn't.
Mr. Tiwari, one of the differences between the budget presented by the Modi government in its last year and budgets of the UPA era is that there wasn't as much populism at play. The urge to try and distribute freebies and win voters, the finance minister committing once again public reiteration of the glide path towards fiscal conservatism, and the government also saying, okay, we will build infrastructure which has a higher multiplier rather than give out doles. And that seems to be a big difference in the economic approach of both governments and both parties towards budget making.
So Rahul, here's the answer to that. Now, if you look at the budget, it has a 17 lakh crore hole in it. Right? That is the size of the fiscal deficit. I think it was about 1750 last time, it's about 1785 projected going forward. And essentially, out of that 17 lakh crores, which is the deficit, 11 lakh crores is going to be financed out of market borrowings. So when government goes out to borrow, it essentially means that the amount of capital which is available for the private sector correspondingly comes down. And therefore, you are seeing a strange paradox that notwithstanding the fact that the government in 2019-20 lowered the corporate income tax rates, the private sector cylinders are not firing. And so therefore this 10 lakh crore capital expenditure which the government has put into the budget, which they say they have increased by 33%, is actually 13.5 lakh crores, is actually an admission that the policy which they had adopted in 2019-2020, and yes, there was the aberration COVID years, is actually not working out on the ground. So therefore, I think it is an explicit admission that the cylinders of the economy are not firing, and therefore we have to keep putting public expenditure in order to keep the. Let me complete. Look, nobody is discounting the headwinds which are there. All that I am trying to say is that the expectation which was there in 2019-20, when 1,45,000 crores in concessions was given in corporate income tax, have not been fulfilled over the last 3 or 4 years, and it is reflected in another number. If you look at the revenue inflows per rupee, corporate income tax is 15 paisa to the rupee. Income tax is 15 paisa to the rupee. And howsoever my friend Rajiv Chandrasekhar may like to discount the whole Adani syndrome, the fact remains that there seems to be very serious corporate governance and regulatory issues at play. You know, for a bank to say that we are not going to be honoring the corporate bonds of a particular company is not one promoter in isolation. It has an impact on the entire ecosystem. So going forward, you know, 2-3 things are very clear. For whatever reasons, the corporate investment which was expected to kick in has not kicked in. The second thing is that the concessions which have been given, you know, in terms of income tax, etc., in order to put more money into the hands of the people, will it actually generate consumption-led growth, or are we missing the wood for the trees that post-COVID there has been a structural change in consumption patterns which we seem to be completely discounting? And third, of course, you know, the regulators and also the government will have to account, because if what the Hindenburg report says is even partially correct, I mean correct to the extent of even 5%, you know, it really flags a serious regulatory breach and corporate governance issues. And this is going to have an impact on whatever economic trajectory we are going to take. So all in all, if you look at it, you know, even defense spending. Now, you have a situation where China for the past 2.5 years, right, capital expenditure on defense procurement is up only 10,000 crores.